very warm welcome to you as you join us on today's episode of Tax Matters. My name is Olumuyiwa Matuloko. How's your week been and how's business going? We keep asking you how business is going because we are genuinely interested in your well-being. We want your business to do well and we want you to do well in your personal life because, of course, when you do well, more money will come into government coffers. You like that, don't you? Last episode on Tax Matters, we shared with you the proceedings of one of the 15 sessions at the recently held International Conference on Tax in Africa, held under the auspices of ATAF, African Tax Administration Forum. We showed you that, contrary to widely held beliefs, that value-added tax is easy to administer, that value-added tax provides audit trail for the use of tax administrators, that VAT is neutral because it is based on consumption and that it does not add additional burden to businesses, that several years of administering VAT all over the world has proved the contrary, that VAT is indeed a ready tool in the hands of fraudsters, that compliance for VAT has remained low, very, very low, much lower than expectation, and that VAT has not yielded the expected dividend all over the world. You heard from Mr. Abiodun Aina of Nigeria's Federal Inland Revenue Service. You also heard from Mr. Alfred Akibo Betts of the Sierra Leone Revenue Authority. You heard from experts from OECD, from IMF. Today, we want to continue the discussion. The topic remains, how can African countries address VAT leakages and their impact on tax systems?
Value-added tax is a tax paid on all goods and services and remitted by the seller of the goods or provider of the service to government. 5% VAT is added to the total cost of goods and services in Nigeria, and when remitted to government, is used for funding development. The VAT you pay will be used by government to develop our transport infrastructure like roads and railway lines, to continually improve our educational sector by building more schools and upgrading existing ones, to provide adequate security and a better quality of life for us all. Pay your VAT. Make your contributions to the development of Nigeria. It pays to pay your tax. This message is from the Federal Inland Revenue Service.
Delegates in plenary were given the opportunity to contribute to the discussion, and that is our take-off point on today's episode, which is a follow-up on last week's episode. Remember, the topic is, how can African countries address VAT leakages and their impact on tax systems?
Most people, particularly the micro, small, and medium-scale industries, enterprises, most of them don't understand what is VAT. They still believe they are the one paying the VAT. That's one problem. Secondly, the Inland Revenue has found it so difficult. I'm talking about Nigeria. Very difficult to register all vatable persons or companies. So what they are waiting for you is that if you have any issue that you are coming to government or you are coming to Inland Revenue, they say, where is your VAT? And by the time they calculate VAT, calculate penalty, in most cases, it's more than the asset of the company. So which means that technically you have liquidated the company. Another thing is that because they are not able to register all vatable persons, I will give you an example. Suppose in a market where you have about 100 people dealing on the same product, and only 5% are registered. 5% registered under VAT. What you see is that the 5% cannot charge VAT, because if they charge VAT, they cannot sell, while 95% are busy doing their business. So you need to register these people so that this 5% can be able to pay. So there's no level playing ground for everybody to be able to charge VAT and render return to government. That has been a very, very big thing.
Ordinary with 5% rate, we ought to be collecting much more than we're doing. Though not stated in the law, retailers, at the onset in 1994, we are not bothered. We operate what we call the gross product model, or a variant of it. So there are inbuilt disincentives. For instance, restriction on recoverability of input VAT for even a service provider or service. Of course, VAT on capital, understandably so. So because as a consultant, you render service, you pay VAT on the paper, you pay VAT for telephone calls, but you cannot recover it from the VAT you charge for your service. So that's a problem. We also have a peculiar problem of even cost-push inflation. You bought a good for 100 naira, VAT is of 5 naira, you have to do your markup on 20%, which should be on 100 naira. Rather, they will do on 105. So they will now, collect more than in terms of sales price, and also that it goes to be an excess output VAT. This output may not be remitted. We also have in the oil and gas industry, that's where you even have a problem, what they call reverse charge. Unfortunately, when they were making the law in 2007, they took every company in the oil industry as an oil company. Whereas the target was for those who are in the service industry. Because, for instance, those who are suppliers are not in the hardcore upstream oil industry. And a lot of them collect contracts, they charge VAT, they collect it, they don't remit. Government would now wanted the big international oil producing companies are more tax compliant. So when your supplier of service charges VAT, don't pay it to him. We told it, we trust you, remit it to us. Unfortunately, when the law was made in 2007, every company in the oil business was taken to be an oil company. So for you as a provider, you pay VAT when you are sourcing what you are going to supply. It is withheld by the seller. When you supply to the big oil company, you charge VAT, the big oil company withholds it. So double jeopardy. Your input VAT has already been withheld. Your output VAT is also withheld. And so there is a problem too. The same problem if you render service with the ministries. And in the tax rewriting project which I led before I left the service, we were proposing a kind of withholding concept under such situation. That if you take a scenario of you supply a good, you bought a good for 100 naira, take 20% markup, you have 120 naira as sales price. VAT 100 is 5 naira, VAT 120 is 6 naira. So there is a difference of 1 naira that you should remit. That 1 naira over 5 naira is 20%. So for situations where you supply goods to a government agency that withhold the VAT, or to another company that withhold the VAT, that you shouldn't withhold the entire VAT. That's a principle that we want to try, which some countries in the Caribbean have been doing.
VAT requires an army of enforcers for it to be successful. And if we cannot afford that army of enforcers, then we need to start looking at different ways of ensuring compliance. And one of the things that we need to think about doing is creating enough peer pressure in the community so that they encourage or force each other to become more compliant. So how do we get the community to do the enforcement on behalf of the tax authorities? For instance, committing a percentage of all VAT collected from an area to development in that area. Secondly, how do we get government to understand that VAT collection and VAT enforcement cannot be a revenue authority responsibility alone. Government departments need to start working together to ensure greater compliance. And it needs to be unique to the environment that it's in. For instance, if a government department is responsible for the licensing of businesses, how do they share that information with the revenue authorities so that we can identify those people that need to be registered and are not registered? I just want to close by saying that there are many, many areas of non-compliance in VAT. In my opinion, apart from what we call letterbox companies created purely for the purposes of extracting refunds from the revenue authority, apart from that group, perhaps the most urgent area for attention is the non-registration. Because these people have a license to collect money and not pay it over if they are not registered. So we need to find unique and different ways, because we can't afford to get an army of people to enforce this.
VAT is a fiscal tool that is supposed to serve a certain purpose, basically revenue generation. When it is applied as a tool to solve issues other than revenue, like creating incentives or trying to satisfy sectors of our economy, then it creates distortions. It creates administrative inefficiencies, and it will often need to develop systems to counteract the challenges of implementation that it brings. That is the source of leakages. Because to the extent that we use VAT as a tool for a purpose other than what is intended, then we create the incentive for deviations that will always lead to leakages. There are instances, example in my country, when VAT is thought of as a tool to help certain sectors of the economy grow. Some of such features are best addressed through income tax systems.
Back to the panelists. What is the solution? What is the way forward?
My name is Faith Mazani, originally from Zimbabwe, where I was a commissioner. Also worked in South Africa and Swaziland. And my experiences in those three countries, as well as what I'm experiencing here in West Africa as I work with the non-Francophone member countries of the ECOWAS region, is actually the other side of VAT. The issue of refunds, when I was in South Africa, we actually I had 3 branches in Gauteng South, which were where I actually had to report negative revenues because there was an airport which was being used by companies to create documents to claim false exports. And that created refunds for them because exports are 0 rated. So we ended up refunding to a number of companies. In Swaziland, my biggest challenge as commissioner there was that being a very small economy, with companies mostly from South Africa, based in South Africa, coming into Swaziland to manufacture and export 100%, including certain industries like the sugar industry. And I'm sure my colleagues in Swaziland will indicate that that is still a challenge. So there are a number of ways that companies have come up with to claim back, and refunds are a biggest issue, and a number of people have indicated. Where I found that countries have decided not to give refunds, like one of the member countries, companies were actually threatening, that is international companies, were threatening to leave and pull out because because of the high cost of VAT, which they could not claim. So I want to come back just very quickly on the point that VAT is supposed to provide us with an audit trail, and that should be easy. But the challenge that we have as African administrations, we don't have the audit capacity. We have a project that we've been doing with all the member countries, and we've just done one in Nigeria, where we take customs data on imports and compare it with domestic tax, VAT, and income tax. And we find that what has been claimed on import doesn't match at all what is claimed in the VAT return. And in the same way, what is in the VAT return is not actually reflected in the income tax returns. And this speaks to the problem that we have been talking about on the use of data. We have silos where we have data that is sitting in our records, in our files, but we are not using it to manage. We are not using it to track back and take advantage of what VAT is supposed to give us and provide the ease of administration. So my challenge to the administrations is, let's use the information that we have. Let's use the audit trail that VAT provides, that links the different suppliers one to the other, especially those that are actually registered. Everybody is supposed to be paying VAT, but the principles of VAT are that you work with a small number of taxpayers that you can manage and that can provide you the data. And most VAT laws are very clear that you need to be able to provide records so that you can manage. But I find we go very low, especially in African countries, and bring everybody, but we can't actually manage them. So for me, I think the biggest challenge that is opening us to all this fraud is, one, we are not giving the refunds. We don't have the capacity to audit. We are not using the information that VAT can provide. There are so many sources of information and data that we can access, that we can use to manage and administer VAT and get the advantages that we can.
What is key for tax administrations is to make it to, when we're talking about policy design, when we're talking about legislation, etc., once you make it difficult for the taxpayers, once you make the system complicated for the taxpayers, it means that you'll always have VAT fraud in there. Even if, obviously, if it's very, very simple, they will still do it. But when you make it very, very complicated, it also makes it very, very difficult and obviously easy for them to actually do this thing. So I'll conclude with that for now.
We need to have a threshold in Nigeria. Everybody now qualifies to pay VAT, even micro and small businesses. In other jurisdictions, you have a threshold that is sufficiently high so that the number of people we are contending with are manageable. That's not what we're doing presently. Two also is the VAT on capital, which is, I think, Faith Mazani alluded to. This is being mentioned over and over. We did a review of our national tax policy recently, and I want to believe that the policymakers are here. These are some of the things that we are also going to be looking into, and as part of our own takeaway here. For us in Nigeria, to combat the fraud on refund, our own Establishment Act says each time a taxpayer requests for a refund on VAT or any refund whatsoever, we carry out an audit. So that enables us in a way to mitigate the fraud on VAT refund. And finally, what we think is technology to the rescue. The more automation you do, the less interference with human beings in collection of this VAT, the more you are able to reduce the leakages and block the loophole. But I think what we do in the final analysis is the transparency with which the money that is collected from VAT is deployed by those in government. Like I said earlier on, there seems to be a general feeling of people that why do I need to pay this VAT in the first instance? So the more this money is being used and people are beginning to connect with the benefit of paying the VAT, the less we will have these leakages and fraud in VAT.
Commendable. At least we know that the tax authorities are equal to the task. It's just that value-added tax is not as easy to administer as it was thought to be at the beginning.
There are some amazing examples out there of what can be achieved through interagency cooperation, notably with criminal investigation and so on. And then education, educate, communicate, and once you're finished, start all over again, because you need to educate. Last week, we had a meeting in the e-commerce space, also global meeting. I was thinking about, the role of education and how that then triggers peer pressure. Awareness is risen, and then certainly those that comply are seeing competitors from around the world in e-commerce that do not comply, and they actually come to the governments. They also come to us at the OECD saying, those guys don't comply. These peer pressure elements are extremely important. And one very last point, the economy has become global, right? So all countries are now looking at sort of implementing technologies within their tax administrations. And there we have, a global economy with very small multinationals that are expected to be compliant all around the world. And they're hit with new obligations that might be simple, but they're different in every country. And if something is simple, but it's different around the world, it's also complex. So be careful also there to put all your eggs in the technology basket. Please start by looking at your design and looking at a decent risk-based tax administration.
We see a lot of cross-border transactions that are actually fraudulent, like I indicated in my situation between Swaziland and South Africa. And we need to have the administration speak and advising and sharing information across. And I remember the Gambia actually requested, despite Senegal not being part of our region, requesting that the Senegal be invited to the workshop, because most of their VAT issues are actually from businesses in Senegal. And we need to have that exchange of information and cooperation and collaboration. The last one is the building of audit capacity by the administration. We have been giving training to our member countries, and where you are actually training auditors, you find you are given people that don't have any knowledge on computers. And these are people that are supposed to be auditing international companies. I think administrations, a lot of wool is being just rushed across your faces. A lot of things are happening. We have seen this in our data match results. There's so much that is happening that even from being done by even companies that you think are actually supposed to be compliant. And if you look at the compliance of VAT, registration where you are giving refunds, even where you don't have refunds, is not a problem because they want to come into the net. Then filing starts being a problem because not all of them file. But the biggest challenge for compliance management for administrations is in the payments, because they are just paying enough for you not to look at them. But a lot of revenue is still to be paid. And then we need to make sure that they are reporting what they are supposed to. So VAT requires a lot of capacity to enforce and to check the compliance of VAT.
As you can see, the third INT'L International Conference on Tax in Africa was not a picnic for the delegates. Rather, it was a forum for frank talk, soul-searching, and fact-finding. Now we have all agreed that administering VAT is not a tea party. And so we want to know from you, what additional measures are we to put in place to ensure that value-added tax becomes the veritable tool for revenue generation that it was designed to be ab initio? And talking about additional measures, we recall the intervention of Mr. Taiwo Idele of PwC at a forum way back in the year 2014. Listen to him.
In Tanzania, one of the things they did was to do raffle draw. If you go and buy goods and services that are liable to VAT, government announced that you must please collect the receipts and ensure that there is VAT, because you can then text there's a code, you can text it to a database, and at the end of every month, they do a raffle draw, and people win cars and all manners of things. If I know that I can win a car, why won't I say I want my receipt with VAT? And then that person, because he has put VAT on the form and I've tested the code to government, if he has not remitted, government knows. Okay?
Spy catcher, whistleblower, call it what you like. Giving incentives to ensure that those who bear the burden of VAT, the final consumers, are able to tell on those who collect from them and will probably refuse to hand over to government. Beautiful way, but there must be additional measures. So we're expecting your text messages, your emails, and your voice calls. How do we make VAT administration leakage free? How do we make VAT the veritable revenue generating tool that it was designed to be? We want you to join us again on this platform next week for a fresh episode of Tax Matters. Remember, it pays to pay your tax. See you next week.